The broadcast is now starting. All attendees are in listen-only mode.
All right, let's see if we can see the screens. Audio view. Yeah, you can see my screen. Great. Okay, it's October 3rd, 2019. It's about 5 to 1 Chicago time, and it's another episode of the CFRN Thursday where we take an hour. Spend about an hour going over the CFRN trade setup in slow motion. So we're going to, let me bring this over. Here we go. It's acting goofy today. We're going to go over the trade setup in slow motion. Okay, so what Michael's doing in the training room, we'll go over, but I'll break it down. Okay, we're going to go over the traditional slingshot setup. Okay, and then what we'll do is, this is a little scary. Okay, and then after we break that down, we'll go inside the live market and we'll look for that same setup, and we'll jump inside this tower here, call that a DOM, depth of market, and we'll look to get long and we'll look to get short, and I'll show you how to place those trades and where we put our stops, and so I'll go over that from start to finish, but I'll try to do it in slow motion. Okay, if you're brand new, this is a great syllabus for you to lean on. It's a great cheat sheet. The reason I do this every Thursday, because there was a demand for someone to put the brakes on a little bit, slow it down, so the guys on the trial, especially, and the brand new guys, can absorb what's going on. So at the end of the trial, once you get an offering from CFRN, your eyes are wide open. Hey, yeah, I want to do this. I think I want to take this path. I'm comfortable where I'm at and the guys I'm working with. So the idea was to give you an eyes wide open approach. That was my goal. I'm also going to go over the trade setup in the live market. So the guys that are already CFRN members, maybe just started or brand new to trading, or maybe they're just spinning their wheels, they're not running on all cylinders, you guys get an opportunity to ask questions. I'm going to go over some traps that people fall into. I've been in the room from day one, and so I've seen a lot of screenshots and done a lot of tutoring over the years. So I've seen some of the common pitfalls that people fall into. So the idea is to bring that to the front page here and highlight those. And the idea is, hopefully, once you're involved and you're trading and you see some of that happening in front of you, you instead of hitting the buy sell button, you hold off and consider what I've said on a Thursday afternoon. Okay, so again, the idea is to educate the new guys, but also returning members. This will give you a chance to spend more time in front of the markets, learning the personalities of the markets that we're trading, and to ask questions. Okay, so let me organize my desk. In the event my phone rings, and this is live, so my phones are going to buzz. If it does, I apologize in advance. I'm just going to put you on hold and pick up the line if that happens. Okay, so let me okay, so hold on, this guy wants the link. That normally happens, so 1 second, John, I'm sending you the link.
Most of the time. You can still take it.
Sorry, guys. All right, John Baker, you have the link, so we'll see you in a few minutes. And so I got distracted there, but the idea is, before I present, I have to go over the disclaimers. So I see a lot of familiar faces in here. I know you guys have seen this. But again, this is for the guys that are brand spanking new to our space, which is trading futures. Okay, the guys that a lot of the guys that I have seen over the years that come knocking on the door at CFRN, they're already numb to this. They've been to this guy and that guy in this room and this room, and they've been through the battle and the war, so they understand what risk is all about and trading our markets. The guys that are brand new, what this basically says is that you can lose everything and some in your trading account. If you don't have a trading plan, you're not using stop losses. Hi, John. And you aren't engaged in what's going on in the marketplace. If you're not engaged in what the news reports are. If you don't do some of those really simple things, this disclaimer is going to hit you right smack dab in the gut. Okay. Doing this for almost 25 years, I have really seen the good and the bad and the ugly when it comes to it. So that's why I don't just display this and tell you to read it and put it under the blanket. I want you to understand what's going on, because again, this is an eyes wide open approach, and it starts with this. And I know it's not a glamorous way to start a webinar, but again, I'm being very transparent about it. And if you're brand new, you're probably getting all the crazy emails about how everyone's killing it in the markets, and you ignore the risks that are associated with this, and so you get hypnotized by it. So there is risk in trading. Like I said, most of the guys that get to the door are already numb to this. They've been through the battle. So, anyways, that's that part of it. Also, past performance is not necessarily indicative of future results. That's a new one that I had to make sure I talk about. So that's been disclosed. And then the last thing is that the risk capital that you're putting in your trading account should be just that, risk capital. Should be money that that you can afford to lose. Nobody likes to lose. I get that, but it shouldn't change your lifestyle if you do. Okay. The good thing, the positive to this is that if you go down the CFRN path, you are going to have a set of rules, right? You're going to have a trading plan. I'm going to go over 4 of them. I know there's 3 outlined, but there's basically 4. Every trade has an 8-tick stop attached to it. Doesn't matter what market that you're trading. So it kind of checks that box, right? You're going to be on a 4-tick range chart, okay? So you're really going to have to be engaged in what's going on in the market, right? It's rules-based. So it checks that box. When you're trading with CFRN, they don't trade around news reports, okay? If you're not familiar with this, this is the DtPro platform. It's the same platform that Mike and Dwayne are using, okay? If you're not sure about where to find the reports, if you're using DtPro, you go up to research and ideas and hit the economic calendar. It's right there. It tells you, okay? So again, the idea is to have a trading plan in the morning. You should know what the reports are, okay? And then you shouldn't have any, you shouldn't be trading around them according to, their rules, okay? So what I'm saying is all the scary things that I talk about here, okay, can be watered down a little bit if you go down that CFRN path, because, you're checking off a lot of those boxes, okay? You have the plan, you're using stops, you're engaged in the marketplace, you're going to be in front of your trading account, you're going to know what the news items are. If all hell breaks loose, okay, you do all the right things and you place a stop and something happens, and this is a possibility. It is a possibility where the market hops over the stop. It doesn't get elected, and you are in the market. You have some risk on the table at that point. The plus side of that is you'll be in front of the market, you'll be in front of the DOM, and you can hit this exit at market and cancel button. You can get out right away, and then you can assess the situation, take a deep breath and say, what the heck just happened? Or call me and say, hey, am I flat? Where am I at in the market? Something just happened. Okay, so that's the long-winded explanation of that one little disclaimer page. Okay, again, you've been around too long not to gloss over this, so that's why I talk about it. The second part is my relationship with CFRN. This is me over here. I work with Daniels Trading. Okay, CFRN. They don't work for Daniels Trading, and I don't work for CFRN. I know I'm in the room every single day, and I support them, and I talk to a lot of guys on a daily basis. But there is a line in between us, and it doesn't get crossed. It can't get crossed. So it's their indicators. They're the educator. It's their trading tools. Okay. So ultimately, if you go down the CFRN path and you say, "Hey, I want to be a member," you are going to any payments that that take place. That's between you and them. It doesn't go through me. It's between you and them. Okay. Anything on their website, like the Thursday night workshops and the Logic 247, okay, which is in front of you now. Anything on the website that's not working, you can reach out to Valerie. Valerie is on Telegram, okay? So you can reach out to her and she'll fix it. It is fair game to call me. I know Michael a lot of times is traveling and doing other things. Dwayne is on the radio in the afternoon. It's very nice. People will call me and say, "Hey, can you have Mike or Dwayne call me? I've been trying to get a hold of them." It's fair game. I have them on my cell phone, so I can just text them and say, "Hey, do me a favor, can you give Joyce a call? She needs a phone call." So that's fair game. Okay. So I have to display my relationship with that. It really, in a nutshell, it started about 10 years ago when it was just radio. And Dwayne and I got together in some way. I even forgot how we got together. But he said, "Hey, come on the radio program. We'll talk markets and shop, and you can answer questions because we got all these types of questions, and I'm not sure what to talk about. And since I've been around forever, I can really dig deep in some of the stuff that people were asking." So it started with just the radio program, and then the one thing that I noticed over the years was people kept asking Dwayne, "Can you show us how? Can you show us how? Can you show us how?" And he got together with Michael. They were both trade station developers. The platform that you see in front of you is the platform that I support, which is DtPro. It reads easy language. Okay, so they were able to download the indicators in the platform, and here we have the relationship in play. So maybe perfect timing on my part, but the bottom line is I've been in there from day one. I know the setup. I can teach the setup. I have looked at hundreds of screenshots over the years. People have questions about what's going on. Am I doing this right? Hey, I lost in this trade. What do you think? I've seen it all. All right. So I forgot what the heck I was talking about. But oh yeah, we were talking about this beat. Okay. So that's how it all started. Okay. All right. I'm done what I'm supposed to talk about. I have to cover these things before I present anything. So I can finally shut that down, and we'll pull up the rules. But in the time being, let me shut down this live platform, and I'm going to go into the dummy or the demo. Okay, because I have other things on the live platform, and if I push some buttons, it might. I can't. I don't want to go in panic mode if I do something wrong. So we're going to go in demo mode. And for the guys that are brand new, okay, here is your syllabus, because I'm going to break down the trade setup in slow motion. Okay, this thing has been around from day one. I know there's other trades I've had developed throughout the years, but this guy has been around from day one. So that's why I talk about it. In fact, the chart that I use, I'm looking at a NASDAQ chart that was set back in 2012. I think Michael took the snapshot of this. So I use this because it highlights everything. So, so the first order of business is the time frame. We need to get everybody on a 4-tick range chart, okay? So it's the same time frame that Michael is using in the training room. So if you're on DtPro, okay, on the left-hand side of the chart here, you should have a little box that says, you know, what time frame you're on. A lot of guys are on, the guys that are on Logic, you're on a 30-minute chart, right? You might be on a 30-minute, you might be on a 5-minute chart. The idea is to get on a 4-tick range. So all you have to do is, next to the time frame, just hit the drop-down box. Go down to Custom and select Range Bar. Make that one look like a 4, then hit OK. Okay, you're staring at the ES, that's the S&P Mini, if you're brand new, and you're looking at it on a 4-tick range. The first trap that people fall into generally is they'll come down here, go to Custom, but they have tick bar and make that 2 look like a 4, and then your same chart looks like this. You're staring at this, it's just wrong. Okay, so you need to get on a range bar, and the tip off, it's this little guy here, the parentheses and R, that'll let you know you're on the right path. Okay, so we're on a 4-tick range. So why are we on a 4-tick range? Why is that the magic to this? Well, I don't know, but what I do know is that a few things that are happening that you should know about. The height of each candle, no matter how small or how big they look, it's 4 ticks in height. Okay, 4 ticks in height. So in the training room, Michael can be proactive. Okay, what does that mean? That means this. The market's trading roughly around this price here, 29.05. If all the rules apply, what rules are that? These rules. Okay, these 4 rules here. If they're all in play, okay, what Michael can do is he can put a buy stop above the current market price, or he could put a sell stop below the current market price. Okay, so if it's a bullish setup, you're going to start hearing him calling out the highs and the lows of then the current bar. Okay, and the fact that he knows that the height of each candle is 4 ticks in height, he can be proactive in placing the order ahead of time. So if the market does one of these, he's going to be stopped into the market. He'll enter on a stop. So if the momentum carries it, okay, he's going to be riding along with the momentum. And conversely, if it's a sell setup and all the setups are there in play, because he knows the height of each candle, he'll start calling out the highs, and then he'll place an order below the market price. So if the market does break down, he's going to enter on a stop. So there was a great question from a new guy in the training room this morning that highlighted this. He goes, Mike, how did you get into that trade? Because the market, I think, just took off. It might have been the crude or the gold. The crude and the gold, they're really emotional markets, right? If you ever trade it, you know what I'm talking about. Okay, I asked him, well, how did you get into that? And it's this reason here. Okay, when he's starting to call out the highs and lows, he's preparing to place a buy stop or a sell stop. Okay, that's what he's doing. Okay, so that's the scoop. So 4-tick range, the advantage of one of them is you can be proactive in placing an order. Okay, the disadvantage is slippage, right? That means if you place an order here at 29.06.5 on a stop, you can get filled at 07 or 06.75. You're just saying, get me in. Okay, I'm willing to take this price or better or higher. Okay, so you're sacrificing a little bit of slippage just to make sure you're in. Okay, the other way to get in is let the market qualify or let the rules apply, and then go in and left click. Okay, the advantage of that is, right, it's my price or nothing. The disadvantage of it is, what if you miss the trade? Okay, I will go over that. Okay, if it qualifies, I will talk about it, and I'll do it in slow motion, so it's very clear. Okay, you won't miss out. Okay, so that is the long-winded explanation of 4-tick range. That's the time frame we need to be on, because that's the time frame that Michael's on. Okay. So the next order of business is we're going to work on the top portion of the chart. Okay. So we're going to look at price action. So some buzzwords. Now the guys that have been here over and over and over again, this will take probably another 5 to 10 minutes. So if you get bored, go get some coffee, and then we'll pop into the live market. Okay. But for this is basically for the brand new guys. Okay, because this is what you're going to see in the morning. Okay, and it's going to be in fast forward. And this is an opportunity to absorb some of the buzzwords and the things that you're hearing in that training room. Okay, so step number 1. Okay, some buzzwords. The red and blue line is referred to as the MA1. Okay, nothing fancy about it. The green line is the BBC. That is short for bullish and bearish cross. Together, okay, make up step number 1, which is this. When the MA1 is crossing the BBC and it's red, that's a bearish cross. When the MA1 is crossing the BBC and it's blue, that's a bullish cross. So the one that's highlighted here, that's a bearish cross. Okay, that's because the MA1 is red. So that lights the match. Okay, that tells us, okay, as soon as we get this bearish or bullish cross, we're looking for opportunities to get long or short. Okay, we're looking for opportunities. Note I didn't say go short, go long, go short. I didn't say that. I said we're looking for opportunities to get long or short, because that leads us into step number 2, okay, which is this. After the cross, okay, and we have a bearish cross here, the normal thing for the market to do is to pull back to the BBC. Okay, that's the normal thing. So that's what we're looking for. We're looking for the market to gravitate toward this green line. And we're not only that, we're looking for it to touch it, but then close in the direction of the trend, okay, which is highlighted by this arrow. Okay, we identified the trend as being bearish because the MA1 is red and crossing the BBC. So in step number 2, we're looking for a red candle. You're going to find out when everything is the same color, that stacks all the probabilities in your favor. Okay, there's no other filtering to do. The only thing there's left to do is to take action, go inside the DOM and push a button. Okay, so when everything is the same color, it's game on. Okay, that's what you're looking for. Does that happen all the time? Heck no. Okay, but there's things that we'll do to prepare yourself in case that doesn't. Okay, if you just follow along. There's a sequence I'll teach you, and then if you go through that order every time, it'll just be a robot. Okay, but what we're looking for is that normal thing, is for the market to gravitate toward the green line and then close in the direction of the trend. That is step number 2. All right, here's the curveball. Sometimes the market has so much bearish and bullish momentum, it won't get to the BBC. Okay, here's a good example of it right here, right? Doesn't quite get there, and then it goes down. Okay, that is going to happen. It happens here too, right? That's another example of it. Okay, so what you're going to hear from me today is, after you get that cross, whether it's a bullish or bearish cross, you're going to activate your trend line. That's the next order of business when you get the cross. That should be automatic. Okay, I have DtPro up. I'm brand new. Where do I find it? It's right here. If you left click on that, that activates the trend line. And notice how my mouse went into a crosshair. And all you're going to do is start drawing trend lines. Okay, and you do that because I'm telling you to do that, but also you're going to see Michael's chart filled with trend lines. Okay, so that's your next order of business. Get in the habit of drawing a trend line. That's a good habit to get into. Okay, So after we get the cross, you activate the trend line, and as that market starts gravitating toward that BBC, you're drawing trend lines. Okay, as it gravitates toward the BBC, you're drawing trend lines. Okay, and the idea is this: if normal happens, fine. Okay, if it does a right turn, it doesn't quite get there. Okay, you're already in a position to take action if we close, in this example, below the trend line. Okay, below the trend line. Okay, so we covered a lot there in step number 2, but the idea is, okay, the normal thing, tap the BBC, which is the green line, and then close in the direction of the trend. And be prepared for it not to touch it. And one way to combat that is to draw a trend line so you're ready in advance to take action if it happens. So step 1 is taken care of. Step 2 is taken care of. And when step 2 happens, now our eyes gravitate toward the slingshot. Okay? And by the way, no, I'll save that for later because I want to stay on track here. Now our eyes gravitate toward the oscillator, okay, or the slingshot, okay? So some buzzwords here. The blue and red line is referred to as a cycle, okay? The green line is just the green line, nothing special about it. But step 3 is the separation between the green line and the cycle. That is the separation or the divergence that Michael is referring to inside the training room. Okay? The trade exists in the slingshot. It's all here. Okay, and I'm going to show you why. What the cycle is telling you is that the momentum, it's bearish. The cycle is red. It's got a good slope to it, right? Okay, the NASDAQ on a 4-tick range in this time frame, it's bearish. Okay, so you should remember I said earlier we would like to have everything the same color. A cycle that's red, crossing the BBC, a red candle after normal action, and then we have a cycle that is red and it's got a good slope to it. It's got all the active ingredients for this thing to go down. What's especially cool about it is that the green line is pulling away. Together with this price action here, all it's saying is this is just an air pocket in this ongoing downtrend. And with this down close and with this separation, it's time to get short. Okay, that's all it's saying. So on the close of this candle, what you're going to end up doing is you're going to end up going inside the DOM and left clicking. That's what you end up doing. You get short. All right, so finally my phone started buzzing. So don't go anywhere. I'm just going to hit the mute button here and tell them, you know what, hold on. Hey, John, I'm in the, can you call me back? I'm in the middle of a webinar. Okay. Dow's going up, so we're pretty much on autopilot there. Okay, bye. I lied. I didn't hit the mute button. It was John, so I knew. Not John Piper, but some other one. You got a lot of Johns at the desk. Where was I? Okay, so we were talking about the divergence down here, right? So what the green line is saying, look, this is just a pullback in this ongoing downtrend, okay? And this action up here is confirming it, okay? So we end up getting short right here at the close of this candle, okay? All systems are go. What we expect to happen after the entry is we expect the green line to ultimately gravitate toward the slingshot and touch it and close the gap. And at the same time, price action should make a new pivot low. And when the green line gets into the cycle, it's time to close out the trade because this is what we expect to happen. Green line pulls away, gets into the cycle, pulls away, gets into the cycle, pulls away, gets into the cycle, and then at some point the momentum turns, starts turning positive, right? Now we're looking for bullish setups, and then we're looking for the green line to get underneath it. Pull away, get into the cycle, pull away, get into the cycle. So what you end up doing is selling this top, taking profit here, selling top, taking profit here, selling the top, profit here, and then when it turns, buying the dip, and taking profit every time it touches the cycle. Okay? That's the game plan. That's why the trade exists down here in the slingshot. Okay? It happens here. It's just the green line is acting like a slingshot. You're just pulling back the rubber band. Okay? The cycle indicator is just telling you here's the momentum. Okay? It's bearish or it's bullish. Now, does this green line look so simple, smooth like this all the time? No, it doesn't. And that's why every trade has an 8-tick stop attached to it. Okay? That means if you're brand new, if you're trading the gold and the crude, you're risking $80 a contract. If you're trading the S&P, it's closer to $100. And if you're trading the YM or maybe the euro currency, it's closer to $40 if you're dead wrong. Okay? The fact that this green line is not smooth, okay, does kind of this kind of stuff, doesn't quite get there. That's why along the way when we get into the trade, we move the stop, move the stop, move the stop, okay, in the event that something silly happens, which is the market does one of these and then blasts off, okay. It's all about money management, moving the stop, get the risk off the table. You'll hear Michael talk about that a lot. Okay, it's about getting the risk off the table. So in the end, what you end up doing is what you're signing up for if you're brand new. You're not learning to pick the top, and you're not learning to pick the bottom here, and you're not learning to trade from point A to point Z. Okay, you're learning to take a piece out of the middle. And along the way, trailing the stop, trailing the stop, trailing the stop, trailing the stop, until that green line gets into the cycle, and then it's time to take the trade off. Okay, so you're signing up to scalp. You're signing up to be in front of the screens. Okay, because you're on a 4-tick range chart. You're looking at the market under a microscope. You have a set of rules here. You got to be in front of the screen, and you have to be engaged. And not only that, you have to learn how to push buttons in this thing, okay, which is the tower, or we call it the Dom, okay? We do all our buying in the green, okay? We make dough if the money goes up, or if you want to get short, you're going to left click on the red, and you make money as the market goes down. That's going to be the game plan, okay? So that's it. So what we're going to do, we're going to take these set of rules, and we're going to look for them in the market right now. So let's do it, okay? So first order of business, and if there's something that, if you need to have something on a piece of paper, the first order of business, or the number one thing on that piece of paper should be, number one, Bert says the market needs to be trending, okay, period, okay? You better be making lower lows. If we have a bearish setup, we better be making higher highs and bullish setups. And if we're not, then you shouldn't push any buttons. Okay? So, number one, the market should be trending. One habit to get into is this zoom out button here. Get in the habit of hitting the zoom out button. Okay? Because sometimes we get hypnotized by what we see on Michael's chart. They're blowing up. He's got 4 or 5 charts floating in front of us. So it might look like we're, a chart that might look like we're trending might not if you zoom out 3 or 4 clicks. Okay. Now this one, we're making higher highs. Okay. So there's no question about it. Okay. If you're unsure, there'll be some uncertainty on some of this. I'll show you what that looks like. Okay. But here, we've established we got some higher highs, correct? All right. The normal thing for the market to do is pull back to the BBC. Okay. In the process, we draw a trend line. Okay. In all fairness, this candle here is a bullish close. That qualifies as a potential long. Not only that, the fact that we closed above the MA1 at the same time is referred to as a momentum trade. You're going to hear that in the trading room. A close above or below the MA1. Okay, this is a bullish close above the MA1. Remember, we define that here as a momentum trade. Okay, the rules of engagement are, the money management part is you move the stop to break even right away. Okay, I am not even going to touch that today. I'm going to go over the traditional slingshot setup. If you're brand new, you shouldn't be looking at these because you have to be quick on the draw with this crazy Dom over here. And depending on the markets you're trading, you need to be real slick on this. Okay, so we're looking for the normal thing, which is a pullback to the BBC, which we finally get here, and then the up close. Here is step number 2, right here. Okay. Now, as I said earlier, clean this up here. We have to get in the habit of drawing trend lines, correct? As soon as we get the cross, that's the bullish cross over here, we draw a trend line. We draw a trend line for 2 reasons. Number 1, we don't know if it's going to get back here. You don't know if it'll get back to the green line. Or the second reason is the cycle turns color on us. Okay? If that cycle turns red on you, number 1, the first thing that goes off in your head is it's watering down the probabilities on this trade. Okay? And number 2, a trend line is required, but we've already done that because we're proactive and we learned how to draw trend lines after the cross. We'll need a close above the trend line in order to activate the long. Okay? So right now, we have not closed above it. Okay? So no, this is the step number 2. Okay, but we do not have it close above the trend line yet. Okay? So it doesn't qualify. Okay, this here is not a close. Okay, that is not a close. All right, a warning. And here's a disqualifier that's actually coming into play here. Disqualifier number 1 is a market that's not trending. Okay. Disqualifier number 2, and a common trap that people fall into, is what's happening here. When the cycle turns color on us, signaling warning flag, okay, watering down the probabilities, but then it starts curling over. If it's going against you at a 45-degree angle, there is no trade. That's a disqualifier. Okay. Now you may look at this and say, wait a minute, what defines a 45-degree angle? Okay. Split it up any way you want. Okay. You might say it looks like this looks like 30, this looks like 25%. The idea is this. If you have to ask yourself a question, then don't push the button. Okay. It's not easy and obvious if that's the case. So my advice to you is this: to stay out of this trap here. Number 1, if it turns a different color on you, don't push the button. If you have to push the button because you may just really want to get a trade on. If this cycle is red and going against you at a 45-degree angle, or what might look like a 45-degree angle, don't push the button. Okay. And number 3, if it doesn't look easy and obvious, then don't push it at all. Okay. So I'm giving you excuses to stay out of the trap. And here's a big one for people, because inside the training room, Michael is putting trades on when the cycle turns a different color. Okay. If the cycle is flat, let me define what flat looks like, because we see a little bit back here. See it here? Red, red, red. Okay, we're bearish. We're looking good. We're looking good. It's flat. Oh, it turns blue on us. That is flat. When it starts doing this, okay, hey, we got our short hat on, and this thing is curling up at what looks like a 45-degree angle. It's not that clear here, but when that market starts accelerating, boy, it gets a good pitch to it, right? And I said to you back here, when it's the same color and when that's at a nice slope to it, that's good for the home team. So if you're bearish and the cycle is red and it's got a good slope to it, you should feel good about it. Okay, you should feel comfortable with it. If you're long and you're staring at a red cycle that's going against you, you shouldn't feel so comfortable. Okay, and that doesn't matter. Doesn't matter what time frame you're on. Okay. Ideally, you want everything to be the same color. Period. Okay. All right. So that's after the fact stuff. So right now we're not going to touch this, and you can see the price action. It's giving you grief. So if you're long here, all right, you're in trouble. You're feeling it. Okay. Now you're wondering, should I be in? Should I be out? Now we have a bearish cross. So now you're really confused. All right. Let's look at something that looks a little easy and obvious. First question: are we trending? First thing you should be asking yourself. Notice this first thing I do. Zoom out. Okay. To me, this is a market that's not trending. Okay. Highs here, support here, support here. Yes, we made some lower lows, but we didn't spend too much time below it. We had an old top here. We poked our head over it, but look, we recaptured it right there. Okay. The crude is not trending right now. All right. If you're not sure if the market is trending or not, keep an eye on support and resistance dots. If they're side by side, okay, it's not so easy here, but if they're side by side, that's a good indication the market is trading sideways. Okay, it's a good indication. See, if I squish it up a little bit, look at how we traded side by side here for a while. Okay, we're not going anywhere fast. Okay, all we've done is expand the sideways action. This is the second trap that people get into. They get caught in a sideways market. And what happens is they get blindsided because you're on a chart that's blown up. Okay? You're looking at a chart that might look something like not that crazy, but something blown up. Okay, so what appears to be trending, okay, zoom out. All it takes is a few clicks. Okay, you'll get caught in that trap. All right, so we identified that's not trending. Natural gas. Okay, zoom out, zoom out, zoom out. Not the best setup here, but I'll tell you what, because I do want to try to push some buttons here in the DOM. Okay, we do have the bearish cross. That is step number one. The MA1 is red and crossing the BBC. Okay, we have a red cycle. So that's good for the home team. If the market pulls back to the BBC, which is the normal thing, all right, we'll take a look at it, and maybe what we'll do is we'll get inside the DOM and push a button. I don't want you guys to do anything. Just want you to watch, because this isn't so easy and obvious to me. For me to say, go in and push some buttons. Okay? Just doing it so I can show people how to place an order. So let's see what happens here. Let's see it come together a little bit. Let's go to gold, because gold is moving. Okay. Are we trending? No, we get some support and resistance dots side by side here again. Here's that trap. Here's the bearish cross. Here's the pullback to the BBC. Here is the down close. So we got step one. We have step two. Well, we got a nice step number three with separation. A lot of things going in. going on in here, right? That would potentially say get short on this candle, but that disturbs me right there. That support and resistance dots are printing at the same price, okay? That's a typical trap that people might fall into right there, okay? Make sure it's making lower lows or higher highs, okay? You're hearing me talk about the same thing over and over and over again because it's the same things that people do, okay? All right, so let's look indices. We have support here, so we'd have to really break underneath that before I got excited about getting short. Okay, so nothing to do there. Let me go over to the currencies. Let's see what's shaking there. Okay, so here's another example. See how the green dots are side by side here? And that's usually associated with a double bottom, okay? Or red resistance dots, we have some tops here. Okay, that's a market that's trading sideways, okay? All right, so here's what I'm going to do with this one. Okay, so stand by. Here's our trend line. Do not push a button. Okay, we've established it's not trending, but I'm going to show you how Mike is proactive, so listen up. Okay, so potentially if we're staring at this screen, all systems are go, right? Bearish cross, pull back to the BBC, redraw our trend line because that's what we were trained to do. We have a red cycle that's not so steep, and we got some separation. Okay, here we go. If the high is 110.35 and a half, then the low should be 110.33 and a half. You right click at 110.33. Okay, this is where he can be proactive. If the high is 110.35 and a half, then the low has to be 110.33 and a half. If it goes to 110.33, it's going to print the second candle. So then we'll have a close not only below the trend line, okay, but we'll have a close off the BBC with the red cycle. Everything qualifies, okay? So here is the magic formula. Just take plus or minus 5 from then the current high or low, and that's the number you push. So to repeat, if the high is 110.35 and a half, subtract 5 ticks, 1, 2, 3, 4, 5. Right click in the red, and that's where you get short in this example. Okay? We're locked and loaded to get short if that happens right now. That's the order to get short. Now, to take this a step further, you guys that are brand new, see this little button I'm pushing up on top? It's called a bracket order. Okay, notice how the bottom of the DOM closes and opens up. Okay, what the bracket order allows us to do when I select buy stop and sell stop, it allows us to put a stop in behind it automatically. Okay, and I have the set factor set at 8. Okay, so if you right click over sell stop and go factor in ticks, if you right click over buy stop and go factor in ticks, and set that at 8, here's our stop loss. If this gets filled, this order will be released as a stop loss. Okay, that's what that's doing. So that's one less pushing button we have to push. That's, that's math we don't have to think about in our head. It's just push one button, releases this. It's a cool feature to have. It's part of the package of the platform. Okay, with Ninja, I know you have to upgrade to this one and that one, and it costs money every month, and I don't get what it all means, but the idea is this is a bracket order. Okay, so we're in a position to get short. Okay, the order's working, so let's see what happens. Okay, sorry I yawned in your ear, but okay. Now, like I said before, the reason why I'm telling you to sit on your hands with this guy, okay? Because we just said earlier, this is a problem. We're not trending, okay? But again, for the new guys, the idea was to show you how to place an order, okay? This is a proactive way of doing it, like Michael does in the room. It's a good example of it, okay? So we're going to let that sit. Now we're not going to stare at the euro all afternoon. We're going to look for something else to trade because the idea is to get our hands dirty here and find out stuff to do. Here's it. Here's the green dots printing. See, side by side. Don't touch it. Crudes, no, not touch. The natural gas. Okay, here we go again. If the high is 33.10, 1, 2, 3, 4, 5. Go in the red, right click. Okay, oop, I have to set our brackets. Bracket, buy stop, sell stop, right click, factor in ticks, right click, factor in ticks, make that crazy number look like an 8, make that crazy number look like an 8, okay, right click at 232.6. And why we got filled, I have no clue. There we go. We are short the natural gas, okay? Like I said, it's not ideal, okay? Because we're not really trending here, but just watch, okay? This is an idea. This is a good way for me to show you how to place an order in the DOM and hopefully manage the trade. So guys that are brand new, all I did was right-clicked to get short on a stop, okay? The other way to do it is left-click in the red and get short. The bottom line is you're clicking in the red to get short. All right, some highlights here. How do I know if I'm short? It tells you here. It tells you here. If you have a P&L open, that'll be moving plus or minus. This here is telling you you're short. There's about 4 different places to say, dude, you're short the natural gas. Okay? As I said, as soon as this got elected, our stop was put here, 8 ticks away. That's our stop loss working. Some advice to you guys. You should have this box open. Trading, positions in order management, working orders. This box should be open, okay? This here, the stop at 233.40, here it is. It's right here, okay? This will tell you if you have any outstanding orders working. Here's that euro. We still have that working, okay? That's why it's in this box, okay? So if I were you and I'm day trading and scalping, this is a box I'd have open just to make sure you don't have any loose ends, okay? Once you cancel that order, notice how it disappears, okay? Once I put it in, it pops into the box. I would have that open, okay? All right, here's our stop loss 8 ticks away. Watch this. Our euro just got filled, so we'll go back to that. If I want to move the stop down, because this is all about taking the risk off the table as soon as possible, what you do is you left click, drag, and release. Drag and release. Okay, that is how you move the stop. Okay, let's go check on our euro and see what's going on. Okay, that was the down close. That was a proactive way of getting short. Okay, and again, there's our stop loss. Okay, the money management rules. Okay, the people that are brand new, here it is. If it goes 4 ticks in our favor or closes on the other side of that MA1, that's the buzzword we just talked about, a close below this, we move the stop to break even or our entry. Okay, our entry is defined by this guy here, or this solid line here, this dotted line here. We move the stop to our entry. That has happened. right? Drag, move it down. Our stop is at our entry. And notice how that's changed in the working orders column, okay? Now we're at dynamic support. That could potentially be support again. If I were you, you move it to maybe +1, okay? As I said earlier, hands off the trigger because we had support. We weren't trending, right? We weren't trending. I'm doing this just for an example for the guys that don't know how to place orders. So we are short. We got our stop to break even, okay, +1 tick, and we're just waiting, okay? What we expect to happen is the green line to do what? Get into the cycle. It's done that, okay? So two things are going to happen from this point on. Market's going to bounce right where dynamic support is, or it's just going to fall apart, okay? We've been pounding on the door a couple times here. If you're going to get a runner in the market, this would be a situation that could happen. It's like barging down a door a few times, right? It's taking a few stabs at it. Once you get through the door, it could really fall apart, okay? But right now, the stop's where it should be. All right, so that's the euro. So the other one was the crazy natural gas, okay? And again, we're just kind of laying here, all right? I'm not surprised at seeing that because we're not really trending here, okay? Yes, we made some shallower lower lows, but nothing convincing because we have, support is being found right where dynamic resistance was. So I'm not thrilled about that either, okay? So we have a few lines in the water, okay? Keep looking at crude, and crude's going nowhere. Okay, gold. Again, all right? Nothing's going on here. Okay, here is dynamic support printing. It's right where resistance is, okay? We did make some lower lows, but shallow lows, okay? That's right at dynamic support. So keep your hand off the button there, okay? Let's do this together. If you're drawing a trend line, you should be drawing it off the bottom of the wick. It looks like our euro got stopped out. That shouldn't be a surprise to anyone because we weren't trending. We found support. The green line was getting into the cycle at the time. So it's not surprising the market's kind of chopping around here, okay? Because we're leaning it against dynamic support. So in the euro, the bottom line or the takeaway for now is we better get below this double bottom before you even think about the euro on the short side. If you're a junkie that really wants to trade the euro, wait until it makes a lower low, period. Don't do anything, okay? Okay, the natural gas is just being natural gas, is just laying there. I was talking about the gold, and the reason why I was doing that is just to show you about trend lines, activating the trend line and drawing it. It should be at the bottom of the wicks, okay? And that is a close below the trend line, if you're wondering. That does happen a lot, a question that always gets asked in the training room, okay? That is a close, all right? We're not talking about momentum trades today, so we're not even going to discuss that. Let's go to the indices. Zoom out, zoom out, zoom out. Why are we doing that? To identify whether a market is trending. Are we? No, not yet. We have some support here, so stay off. Okay? What else can we get our hands to? Let me go down the currency chain here. Let's go to Japanese yen. Again, another example where the dots are side by side. Okay? So nothing happening there. The British pound, now that's a market that's trending. Okay, that one's pretty easy and obvious. And notice, see what the dynamic support is and how we break it. That's what we want to see in the euro. Get on the other side of those green dots. Okay, so the pound's trending. The slingshot's really sloppy, right? No separation. Swiss franc finding support at dynamic support. No, thank you. Here is a down close in the Canadian dollar. Notice how the cycle now has turned blue. If that's the case, a trend line is required and a close below the trend line is required. That is a close below the trend line. But as Bart would highlight here, third disqualifier just popped up here. Okay. A close in the direction of the trend. Here it is. Defined the trend. MA1 is crossing the BBC. The MA1 is red. We're looking for a down close. There is step number 2. The black step line has now pierced BBC. Okay, that's the third disqualifier. That's the easier one that people pick up on. Okay, and I don't see that happening a lot. Okay, but that is a disqualifier when the black step line pierces the BBC. The BBC, for those that are new, is the green line. Okay, but if you're wondering, that would be a down close below the trend line. Okay. All right, let's switch guns. Let's go looking for more. The reason why I can do this in slow motion at 1 o'clock in the afternoon, because there's not much going on. Okay. Here's the Mexican peso, a nice bullish cross here. We're making higher highs. We had some dynamic resistance printing. We broke those. This is a market that's trending pretty well. Okay. What's cool about that is we have some bullish momentum. And the green line is pulling away. There's that step number 3 we were talking about. Okay. Here's a bearish form of it. Here's a bullish form of it. Okay, the cycle is underneath it. We found it here too. Okay, that's a nice slope. Okay, so we would look for bullish opportunities in the Mexican peso if they presented themselves. What's the normal thing that's supposed to happen? Normal thing is for the market to gravitate toward the BBC or the green line. Okay, that's what we're looking for. So nothing to go on there. Let's see if crude's going to break out on us or not. Okay, we're still in this range. Okay, I know you guys are getting antsy with this, but look, I know we closed under this. Okay, you might say that to you. Here's a good example. Let's do this together. There's the trend line. There's the bearish cross. Okay, step 1, step 2. Cycle's red, the green's pulling away, right? All the ingredients are there. If the high is 46, 1, 2, 3, 4, 5, right click in the red. Okay? Don't push any buttons. Don't push any buttons. Okay, we're going over the DOM again. Okay, this isn't easy and obvious. We're looking for easy and obvious. Okay, there is support here at these green dots. Okay, I want to make a point here because this is where you get hypnotized. Here's the trap again. You see this and you're like short, short, short. Okay. The high is 46, subtract 5, that's where you right click. The other way to do that, okay, is you wait for the down close, okay, and then you go inside the DOM and you left click. You wait for the down close. We'll do it that way this time. So again, if you want to be proactive, okay, this is what you're hearing Michael do in the morning, okay. The question popped up this morning, okay. How did you get into that trade? This is the example right here. Okay, there's the down close. See if we can get in. The proactive way, Mike's in. We did it the long hand. We are short of 43. The stop is 8 ticks away. Here's our stop loss right there. Okay, so let's see what happens. Sorry, I drew a trend line on accident. Okay, let's see. The rules of engagement are, if it goes 4 ticks in our favor, we're going to move the stop to break even. Okay. There's your 4 ticks. So we're going to move the stop to break even plus 1 tick. But Bert, you told me not to push any buttons. You're right. It'll take a few of these where you'll say, you know, you'll be in the trade. I know this is going to happen to you. Okay, 25 years. This is what'll happen. The next time this happens, you'll say, well, this is one of those trades Bert said to stay out of. And the market will just fall apart and you're going to blame me, which is fine because I'm so used to that anyways, being in the seat I'm in. But the fact is, you'll get 1 or 2 of those to happen, and then you're going to jump in, and that's the time you get stopped out. The probabilities are against you, okay? When you get into a market when this thing is not trending, okay? This is what I was talking about, okay? You get hypnotized by this. It's blowing up, right? It looks good. But if you take a few moments to zoom out, we're not trending. We're not necessarily trending here. We're trading sideways here, okay? This is the trap that people fall into, okay? And I've been hammering this down because it happens a lot. So it can sound like a broken record. But for the moment, the idea was I was able to show you how to get into a trade again, have the stop in place, and then we actually moved the stop down. And again, in a perfect world, what we would expect to happen is this green line to pull away and do what? Get into the cycle. And then the market should make a new pivot low, as it's doing now. So, move it down a little bit further. Everyone's mad at me because we're dropping. They could have made a few ticks here. And you're flat, okay? So I would have sold it at 43, you bought it back at 41 or 40, okay? And look at where we're at again, right about where we started, okay? So a lot of times what happens with those, you get stopped out at break even. You just get stopped out and lose. It just doesn't work out. A lot of break evens happen, a lot of plus ones happen, and sometimes you get lucky and it breaks down through the door and you get a runner, okay? To me, it just has to look easy and obvious as this one right here, the Mexican peso, okay? That's an easy and obvious one to me, okay? We're making higher highs, okay? Let's go back to the indices, okay? So we are starting to make some lower lows, okay? We got past this support line. So I would consider possibly selling the ES, okay? There's questions here about larger time frames. The same rules apply, okay? If you're following logic, okay, let's look at logic. You're on a 30-minute chart, right? This is the ES. We have the bullish cross, right? The normal thing for the market to do is what? Pull back to the BBC. So I would expect, before I would entertain any kind of long, I would look for the market to gravitate toward the green line of the BBC, okay, before I got excited about it, okay? the same rules. Okay. Let's go to, you can even go to the daily. Let's talk about the daily. We have a bearish cross in the daily S&P. Okay. We have a cycle that now is turning red. That's a pretty big development, right? And we fell at, where some dynamic resistance is. So if I'm staring at this chart, which I normally do because I'm more of a swing trader, longer term chart trader, okay, I would be, for the first time in a while, looking to possibly get short the ES if we get a rally, okay? And I would be earmarking the green line or the BBC. And I don't have it on this chart, do I? No. I would be looking at possible shorting opportunities if we get a rally up to the BBC. So keep an eye on that. What will end up happening is if I'm right and the market starts getting up toward that line, the BBC, the green line will start building that divergence. It'll get on the other side of the cycle, and then we'll have the divergence. Okay? Kind of like the crude oil, right? Here's crude oil. So here's a bearish cross on the crude. Okay? What we would expect to happen, guys that love the crude, I think Mike's in the room, he likes the crude. I would expect the market to somehow pull back to the green line or the BBC. I like the fact that the slope of this is red. It's got a nice slope to it. If we get up here, the green line will build that divergence. Okay, it'll get on the other side of the cycle. Okay, and then we'll have that separation. So what we would do is look for the crude to get up here and give us some kind of down close. And if we get that, then we can look to get short on a larger time frame. Okay. It would sync with the S&P, right? Because we're looking for, if crude gets up here, it probably means the S&P is rallying, right? Because they're kind of brother and sister sometimes, and they kind of come into play. The fact that we're dropping is telling us, it's signaling that the demand isn't there, and there's definitely the recession fears is kicking in. So, holy smokes, it's 10 after 2. Okay, so I think that's it. Did I leave any? Oh, we still have this, still have a natural gas trade on. Yeah, again, not surprised to see the natural gas giving us grief because this was the down close and we weren't really trending. Okay. So I'm not surprised to see us trading sideways here. So again, quick way to get out, exit at market and cancel. Okay, that gets you out of the position right away and cancel any outstanding orders. A good habit to get into. Have this working orders box up. It's grayed out. That means nothing's working. So that's a good sign. So, recap. We went over the trade setup in slow motion. Okay, we went over the diagram here. We broke it down for the guys that are brand new. Okay, this is the setup that Michael is using inside the training room. He's also doing a momentum trade. Okay, I tabled that because you really need to be quick on the dom. Okay, and he'll tell you that too. Traditional setup, that's the one he's using in the room. Then we went into a live environment and applied some of the what I saw. I didn't see anything that was easy and obvious. But what was good about this afternoon is we talked about the common traps that people fall into. Okay. And again, good habits to get into, hitting the zoom out button to see if we're trending. That'll make a difference. Okay. Get in the habit of after the cross, engaging the trend line. The other thing to keep an eye on too is the cycle. If it turns a different color on you, okay, and it does, if it's starting to curl up or starting to slope in the direction that's against you, not during the, not in the form of the trend, then don't do it. Okay, make sure it's easy and obvious. You're on a 4-tick range. You have plenty of markets to look at, so you have plenty of opportunity. Okay. All right. So that's a scoop. I did record this. It takes me about 24 hours to convert it and get it out on YouTube. You go to YouTube and search CFRN Thursday. That's where they sit. I do them every week, and you're going to find out I go over the same stuff over and over and over again. Okay. And there's a reason. Okay. So that's a scoop. If you have any questions, let me know. Shoot me an email or give me a call.